Now let's get some more reaction to today's Fed announcement. We're going to go to Jack Ablin. He's Chief Investment Officer at Harris Private Bank, which has $60 billion in assets. And he's joining us from Chicago. Jack, welcome. And,
thanks, Julie.
You know, we were talking about what's going on with the various markets here, stocks in particular reacting well after this statement. Now, is it really just the fact that the Fed has made more positive statements, not just in the statement today, but recently about the pace of the economic recovery?
Yeah, I think it's consistent with the Chairman Bernanke's remarks earlier in the week talking about the end of the recession. I think also perhaps it was the fact that the FOMC had a unanimous decision to keep rates unchanged, showed the conviction behind the policymakers. But, you know, all in all, I'd say that this Fed decision is probably the most widely anticipated non-event of the month.
So what are you looking for then to give you a little more insight into where stocks are going to head from here? If it's not going to be the Fed, are you looking at the economic data? What other signals are you watching?
Yeah, I think the economy is really going to be the key fulcrum for stocks going forward. We've got certainly a lot of stimulus providing a lot of tailwinds, and that's going to create more tailwinds probably for the next couple of quarters. So we do have what I'll call artificial stimulus behind us, but that will give us some good economic numbers. I believe that that's going to impress a lot of skeptical investors who are sitting on a lot of cash and help prompt them to maybe chase this market down.
So, Jack, let's look a little further into the future then, past these couple of quarters that you're talking about, perhaps to when the Fed might begin raising rates. And we've been talking with our previous guests about the balancing act here. But how is that going to affect stocks as we see the Fed trying to decide when it is going to raise rates?
Well, I think the juncture is probably going to be about a year from now, maybe the middle of next year, Julie, when we do finally take the patient off life support. We want to make sure that, you know, he's breathing on his own. Once we do that and the stimulus is removed, I think we'll have a much better assessment of kind of the organic nature of our economy. And I don't think the Fed needs to be in any rush to start ratcheting rates up even then, because I do think we have at least probably a 2 or 3 year window before any pricing pressure could ultimately result in inflation.
Jack, in the statement, it says that the household spending seems to be stabilizing, but they caution it remains constrained by ongoing job losses. What does this unemployment picture look like? What's it telling us, and what's it telling us about how the Fed officials are thinking going forward?
Well, I think, as previous guests had pointed out, the Fed has never raised rates until the unemployment rate starts ratcheting down, and that's going to still be a few months away at a minimum. And even if you believe that, you know, we're back to recovery, which I do think we've snapped this multi-quarter recession this quarter, the fact is, once we stabilize, I'm not sure our economy is going to grow at our potential GDP. The fact is, we're going to have to spend less than we earn for a while. In fact, an excess amount because we're going to have to pay back some of our debts. So if you believe that our potential GDP is about 3%, what I believe, that's consistent with roughly 100 to 150,000 new jobs a month.
Right.
Assuming we can get back on track, that's going to take 4 or 5 years just to get the people that have been sidelines in this last downturn back on the rolls.
So bottom line here, Jack, what are you doing with your money given this environment? Do you see stocks as expensive right now? Or are you still putting money in?
No, I think we still have another 12 to 18 months we view opportunities in stocks. But I think if you take a step back and look at a much longer term perspective, Julie, I think we're still in a sideways market. Once we've just got to work through all of these economic imbalances, and that's going to take several years, I believe.
Jack Ablin of Harris Private Bank joining us this afternoon from Chicago. Jack, thanks so much.